Hey traders, welcome back to this week's weekly Forex forecast. Last week was a little bit of a dull week because we had the Labor Day, bank holiday on the Monday, and then on the Friday we had non-farm payrolls. Non-farm payrolls, usually non-farm payrolls week is quite slow anyway. So you throw in a bank holiday and there wasn't a ton going on last week. However, right at the end of the week yesterday, we did have the non-farm payrolls data and it came out very, very weak. So because of this, we saw the dollar selling off quite strongly, and very often it sets the tone, at least for, a couple of weeks. If you get that kind of directional move into the close and then it kind of holds, it sets the tone, for that specific currency, in this case, the US dollar, because it was US non-farm payrolls, for even the rest of the month. So what I think we're likely to see going into next week, I do favor US dollar shorts as a preference. And I think what we're going to see is euro dollar back into the overall high. And in fact, the sell zone this week sits right at the prior high. So I am going to be looking for longs in eurodollar going into next week. It is one of my preferred markets. And of course, we're going to look at all the other preferred markets on my watch list in today's video. But if I just zoom in for now, you can see that, I'll keep that previous high here. We've started to break up after that weak print. And we've made a new high in the 4 hours. And we've started to break back above the moving average. So what I would be looking for, I'm kind of anticipating next week, is probably that this market just pulls back and nestles into the moving average. So that kind of first move breaks above it, and then it kind of consolidates, the moving average starts to turn up, and then you get the follow through. So that's what I'd be looking for specifically next week in euro dollar, that kind of bull flag setup after the news. We did get something similar last time. Just bear in mind, we saw this big move up here. Can you see this? This was on a news event and we finished the week right up here. And I did say to you, look for this coming into next week. However, notice how the moving average stayed flat and we got this kind of V top and a sell off into the low. So again, just as I was speaking to you guys about over here when this took place, be looking for the same thing. Does the market hold? Does it consolidate? Do we get that kind of corrective behavior and it kind of moves sideways enough to let the moving average kind of start to turn? If it does, you can look for that follow through. If we get this kind of V top again, then of course, next week, this bull flag is going to be unlikely if it just sells off hard. Again, this is what I think. If I had to, on balance, have a guess at which is going to happen. Is it going to sell off, kind of V-top or consolidate? I'd be looking at this because it was a very, very weak non-farm payrolls data and the Fed are, going to have to cut. And so I do think this probably holds, but just pay attention, coming into Monday, if we get a V-top like this, so in other words, it comes back, consolidates, and then we get the move down, look at that momentum. You don't want to see that. If you want to see a consolidation, you want to see kind of small candles, and you want to see them kind of choppy. You do not want to see this kind of momentum sell-off. That's profit taking. That's buyers who are sitting on profits over here, booking their profits. They're not holding for the next leg up. So look for that coming into the beginning of the week on Monday. However, if we do get this kind of move down here, this is what I'm going to be looking for reactively. Down below the 1.1590 and these lows over here, specifically this low, this is the buy the dip opportunity I'm going to be looking for. So one of two things there really that I'm looking at next week. First and foremost, just like over here, going to be looking at the form of the price action. Is it consolidating? Is it corrective? If it's corrective, this signifies, most likely we're going to have a next leg up. If you get momentum to the downside, then you can start to look for the buy the dip opportunity, right? If this comes out and it kind of has one day doing nothing and then sells off hard like this, you should anticipate it, or like this, anticipate it, consolidating here back underneath the moving average. Notice this, and then down into the low. So those are the two things I'd be looking for next week. I do think most likely we're going to consolidate and rally into the highs. If, however, we get a strong liquidation back below the moving average, then I'd be looking for the buy the dip opportunity down here. So the extremely oversold level next week is the 1.1469. I don't think it's going to get here, shouldn't get there unless we have some kind of unexpected catalyst, but worth having on your chart nonetheless. So going into next week, I can only be a buyer of euro dollar. I cannot sell this market under any circumstances. Okay, so moving on to the portfolio selection, you can see quite clearly the Swiss franc is the #1 currency to the long side that I'm going to be interested in. Quantitatively, it's the strongest. It is benefiting as the money comes out of the US dollar and it's kind of going into EU majors, but specifically, into the Swiss franc. So I do like the Swiss franc as the #1 long idea going into next week. Alongside that, I'm going to be looking at the Australian dollar to the upside. The Australian dollar, don't forget, is the most risk-on currency. So if the dollar's selling off and stocks are going up, the Australian dollar is going to be one of the best performers, and we're already seeing that quantitatively. It's kind of dipped, and now it's starting to reverse. And also, it makes a lot of sense that if we are getting risk-on, money's coming out of the dollar. Yes, it's going into the franc, but that it would also go into the Australian dollar. Now, to the short side is quite clearly the US dollar that I'm going to be looking at next week to the short side, and the Japanese yen. Two risk-off currencies. So I know the Swiss franc is risk-off, but the Japanese yen and the US dollar, if we're seeing stocks going up and we're seeing potential rate cuts coming in, both of these safe haven currencies are going to underperform. So we are seeing that. And also alongside that, the Canadian dollar. So I do like the Canadian dollar for shorts, the US dollar for shorts, and the Japanese yen for shorts. That leaves one more to the upside. Are we going to look at the euro? Or do we look at the New Zealand dollar? So do we go with that kind of EU major, the euro, 57% of the dollar index, so as the dollar goes up, the euro goes higher? Or do we go for that kind of other commodity currency, very much like Aussie, where we've got the New Zealand dollar, which again, benefiting because it's a very risk-on currency as the dollar sells off as stocks go up. On balance, out of the two of them, I do prefer the euro. So we're going to be looking at in today's video, and the markets which are at the top of my watch list for next week, are US dollar Swiss franc to the downside, franc yen to the upside, CAD franc to the downside. We're also going to be looking at Aussie dollar to the upside, Aussie yen to the upside, Aussie CAD to the upside. And we're also going to be looking at euro dollar to the upside, which we've already looked at, euro yen to the upside, and also EurCad to the upside. Okay, so kicking off the watch list then with crude oil, as we always do. This is a pretty straightforward one next week. There's two setups that I'd be looking at here. So looking for this to pull back into the moving average, test the moving average, and you can look for that kind of bounce. So either it bounces or it kind of breaks above it and then kind of consolidates above it and then re-breaks. Either way, what that will do is it will give you a counter trend opportunity next week. So you can draw your trend line on as the data kind of progresses. And as it breaks out and pulls back, you can look for that bear flag setup down to the profit taking target next week at the 58.42. This is the buy zone. This is the sell zone. So between these levels, obviously many of you already know this, but if anybody new, this is where the market turns overbought and oversold during the week. So if you short it intra-week or during the week and it enters into the buy zone, well, obviously that's a good time to book profits, right? Because this is where you're now oversold on the week. And roughly over 70% expectancy, this is going to stall out once it gets into this zone, and vice versa. So I can only be a seller or do nothing, which means I can open a position in here or close a position in here. Makes sense? So I can't buy down here with a new position, but I can buy back any shorts. So I would be looking at that, potential right shoulder forming over here as well. It's kind of downward sloping head and shoulders. However, if we break back above, so we get a deeper pullback. So you can look at a pullback and a deeper pullback. Those are kind of the two things I'd be anticipating. So if you get that deeper pullback where it breaks above the moving average and maybe it comes down, bounces off the trend and continues up. So you draw your counter trend line on like this and it bounces off it, pulls all the way back. This high over here is the second place and the primary place. This is the primary setup. In fact, this is the main setup that we're looking at every single day with GMT members in real time. So we break above here, we take out this high. We're now overbought during the week in a market I'm looking to be short. So what does this mean? I'm looking for a failed breakout, for buyers to get trapped, and as they pull their positions, you get that kind of liquidation back inside. So those are two things I'd be keeping an eye on for next week. The place at which we turn extremely overbought is the 69.06. Don't expect it to get there. Won't get there unless we have some kind of unexpected catalyst, but it's worth having on your chart, as always, these gold levels where we turn extremely overbought and extremely oversold during the week. Okay, so kicking off the Forex universe with the Swiss franc pairs, and we're going to start with US dollar Swiss franc. Now, we kind of came into this consolidation with this momentum sell-off, and we've kind of got this, what looks like an A, B, and a C. Now we've got that sell-off last week or just at the end of Friday. It looks like we're coming back down to this low. So very similar to that potential rally into the high in euro dollar. So now we've broken down below the moving average for the first time. We've actually got this double top. So the first thing I'd be looking for next week is for a pullback into the moving average, potentially even a retest of the underside of the double top. That's going to set up that potential counter trend trade. And then you can look for the breakdown into the profit taking zone next week at the 0.78907. But because the prior low sits just here, any kind of shorts intra-week would probably be better off aiming for this prior low. If it gets to this blue level, very good chance it's going to take out this prior lows as a profit target in the buy zone. If we actually break back above, so again, we're kind of pulling back, and instead of breaking the counter trend move, you kind of bounce like this, you break back above the moving average and you get the deeper pullback. You could look for a trade above the 0.80720. This is where I would be looking once we enter the sell zone in a market I'm looking overall to be short. I'll be looking for a failed breakout to the upside and a liquidation for 1 or 2 days back inside the range. So those are the two things to look out for next week, and the place at which we turn extremely overbought is the 0.81476. Again, as always, don't expect it to get there, but if we have an unexpected catalyst, then it's worth having these gold levels on here. Next is franc yen. This is a buy or do nothing. I cannot sell this market next week, and you can see we're actually starting to trend and channel to the upside. So the first thing I'd look for is that kind of pullback into the bottom of the channel, and again, that should allow you to draw your counter trend line on. Then you can look for the re-break. Moving average will follow it, and that gives you a pullback into the moving average for a rally into the prior high if you want to be conservative. But, you know, I would see if you could break straight through that and go to the 186.61. If you do break through the high, because as you break highs, you know, higher highs tend to be made, and usually with a high this big, tends to be at least, you know, some kind of push through as sellers get liquidated, stop losses up here get triggered, and you get that kind of momentum to the upside. If you do break straight through and go to the 186.61, this is where the profit taking zone is next week from above the 186.61. And the second thing I'd be looking for is if this trend fails, so we pull back, maybe we bounce and we hit here and we don't break. So you don't have the counter trend, we hit here. And then what happens is you break down below this low here, okay? Pulls back, you know, during the week and trades below the 182.80. This is the buy the dip. So this is the kind of intra-week breakout if you get it. And then this is the buy the dip if the intra-week breakout fails or it pulls back deeper. So it's kind of a pullback and then a deeper pullback. If we trade below the 182.87 and we trade below the 182.80, this is where we enter the buy zone. We turn oversold and I'm looking to buy the dip. So I'm going to be looking for a failed breakout to the downside and a 1 or 2 day liquidation back inside. You may even find it breaks back and test the underside of this, you know, if it does it over here. That's what I'm going to be looking for next week. I can only be a buyer in franc yen. I cannot sell this market next week. And the final franc pair is CAD franc. I can only be a seller of this market or do nothing. Buying this market is not an option for me. Now, the first thing I'll note is that we've already had this kind of counter trend move in an overall down channel. So just like over here, counter trend break, look at it, pull back, test the moving average, sell off. So my anticipation would be for a test of the moving average, a consolidation, and then this is your bear flag down to the profit taking zone at the 0.5709. If we break back above, so we break down like this and it goes into a bigger range, that's very often where, you know, you can see it kind of A, B, C, then it comes back up and tests the high, you get that deeper pullback. If it breaks back above the moving average and it starts to push back into the top of the channel, above the 0.58190 is where we enter the sell zone, above this level here. And you can see just above here are two things. One, the descending trend line, and two, the prior high over here. So it might just push through here briefly, you know, for a couple of hours or so. And that would be the area I would be looking to sell in this area over here if we actually push and we have a deeper test next week. So first thing I'll be looking for is a pullback and then a sell off from the moving average. If the moving average doesn't hold and it starts to break higher, then I would be looking for this area right here for a potential short. 1 or 2 day liquidation to the downside is what I'll be focused on capturing. That's usually my profit objective in each asset. And of course, having the gold levels on here is worth it next week. If we do get an unexpected catalyst, then these levels can be reached. Okay, so moving on to the Aussie pairs, starting with Aussie dollar. Now, just remember next week we do have US CPI on Thursday. So ideally, when it comes to the US dollar pairs, I'd rather be in and out of them before CPI on Thursday. If they just kind of chop around, they don't do too much, then, you know, I'll probably trade them from after CPI. But CPI can very often bring directional moves into markets, so just bear that in mind. So a couple of things I'll be looking for next week. We had the Aussie dollar rally to the upside as the US dollar sold off yesterday because of the non-farm payrolls data. I'd be first and foremost looking for this to hold above the moving average, the break and the retest, and we also have this kind of channel. So I can attach here to here, because here is a high, we pull back, and then we make a new high, so I can trace it back to this low and attach this here. So that's the kind of counter trend move. Look for this kind of diamond formation if the trend here, this channel, holds, and you can look for that breakout into. Now the profit taking zone sits at 0.6633. If you want to be conservative, you know, this is the major high. So for the sake of a few pips, you know, it may be worth, if you are involved intra-week, booking your profits at the prior high, just in case it kind of bounces, you know, and reverses before it gets into overbought territory. So that's what I'd be looking for straight out of the gate. But if we break down, so we kind of consolidate and then we break down below the moving average. Remember we looked at this in euro dollar at the beginning of the video. We had the news, then we broke back down below the moving average. It actually consolidated underneath and then went into the lower bound. So if we break down, we get the consolidation and then we sell off into the lower bound. And in fact, in euro dollar, that was, I didn't take it that week, but that was a really nice reversal. So if we do the same thing, we break down below the 0.6484. This is where we enter the buy zone next week. And, you know, there is a low here. If we go straight through it, this would be the primary low I'd be looking at. So I'd be looking for price to come down, bounce, and that 1 or 2 day liquidation to the upside. Keep the gold levels on here because we do have CPI next week, and CPI can definitely move markets to the second upper and lower bound. So these gold levels here. It's one of those pieces of economic data that really can cause directional moves. So certainly from Thursday onwards, if we get either a very, very weak CPI or a very strong CPI, then you could very easily see gold levels taken out in the dollar pairs. Moving on then to Aussie yen. Now, Aussie yen doesn't really have any channel because this is a little bit too steep to channel. I mean, you could put this across here, but I can see clearly this is all part of one move. So the correction here will probably break that channel. So you really need two kind of swing lows, you know, at the very least, and then two swing highs to make, you know, a channel. So what I'd be looking for is we're already down below the moving average. So I'd be looking for the market to pull back. You kind of start this counter trend move. And if you get that re-break in the week, you can look for the pullback into the moving average follows it, and you got that bull flag set up into the profit taking zone at the 97.89. If the trend holds, the counter trend holds, and this comes all the way back down below the 95.44 is where we enter the buy zone. This is where I'll be looking for a potential buy the dip opportunity, and there's a really nice 4-hour low just here. So this is where I'll be looking for a false breakout to the downside, and as sellers get trapped, that 1 or 2 day liquidation is what I'm going to be looking for in real time with GMT members next week. And the final Aussie pair is AussieCAD. Now, I've zoomed out here because in terms of profit taking zones, you can see the confluence we have here. We've got this kind of channel to the upside. The upper channel sits right at the prior high, which also happens to be the start of the sell zone. So as soon as we hit here, we trade into a significant horizontal high, we trade into the upper trend line of this channel, and we trade into the sell zone where we become overbought during the week. So that's going to be a great profit taking zone for any longs next week in Aussie CAD. If we zoom in here, what you can look for is we're already above the moving average. So I'd look for it to pull back, test the moving average, and then start to break. As you pull back, you know, you should have this kind of counter trend move like this. And as you pull back into the moving average, you can look for the breakout next week, pull back and into, depending on how quickly this happens. Of course, if it just breaks straight up, this would be the profit taking zone. But at least into the 0.91310, even if we don't make the top of the channel, the 91310 is where the horizontal high and the sell zone, the profit taking zone, sits next week. So I'd be looking for that next week. But if you hold this counter trend move at the start of the week and it comes all the way down, then the buy the dip opportunity would be below the 0.8984. There's a really nice low just here in the 4 hours. This is what I'd be looking. maybe it comes down, you know, even slower and it breaks through here, hits the bottom of the channel. You know, this would be the area between this level and the bottom of the channel. This would be specifically where I'd be looking for double bottoms on lower time frames, looking for those reversal patterns, momentum to fade, and then that 1 or 2 day liquidation to the upside. So I can either be a buyer of Aussie CAD or do nothing, cannot sell this market next week. Okay, so finishing off the Forex pairs with the rest of the Euro pairs before we move on to gold and silver. Euro yen is starting to channel to the upside. The sell zone or the profit taking zone is at the 174.56. We've got this rally up and we're already consolidating into the moving average. So I'll be looking for this to continue to counter trend, maybe even into the bottom of the channel. And you can start to draw a trend line on here. Looking for the breakout, pullback, and a move into the profit taking zone next week at 174.56 and potentially even the top of the channel. If we break this channel, so this low to this low, and we start to sell off, I cannot sell this market, but what I can do is I can buy the dip below the 170.91. And there's a really nice prior low right at the start of the buy zone. So I'd be looking for a false breakout, and then I'd be looking for a failure and a 1 or 2 day liquidation back inside the blue range here. So that's what I'm going to be looking for next week. Again, have the gold levels on your chart, especially for the dollar pairs, because if we have a catalyst, unexpected, or even in the economic calendar, we can see these gold levels being taken out. And finally, we have EurCad. EurCad is also channeling to the upside, and we've broken quite strongly off of the NFP news. So I would be looking for this to kind of pull back into the moving average. Again, look for the counter trend breakout. Remember euro dollar when we looked at that fake news event where we had the fake move and then it reversed? Notice how it consolidated and it didn't have a counter trend break. It just sold off like this and then it consolidated underneath the moving average. So there was no kind of counter trend breakout. So look for the re-break next week, pull back, and the move into the top of the channel. And also, if you start to push through the top of the channel into the profit taking zone, which is at the 1.63370 right here. So that's what I'd be looking for intra-week. If you continue to trend down, so very much like euro dollar, when we looked at that failed news move, and instead of counter trend breaking, you come all the way down to the prior low, again, which is exactly what we saw in euro dollar, and then that was the buy the dip opportunity in euro dollar at that time. Then the 1.6012 is the support level that I'm going to be looking for, a place in the past where price came down and then reversed higher. I'm going to be looking for a failed breakout to the downside and a 1 or 2 day liquidation to the upside in EurCad. I can only be a buyer of this market next week. I cannot sell it under any circumstances. Finally, just bear in mind with the euro pairs, very much like the dollar pairs, we have the ECB on Thursday. So again, worth having the gold levels on your chart for the euro pairs because we could very easily get to these levels if we get a significant amount of volatility from the ECB on Thursday. And also it means I'd rather be in and out of the euro pairs if possible between Monday and Thursday. Okay, so wrapping up the video with gold and silver, just bear in mind that because of my bearish bias in the dollar, I can only really be long gold or silver. I don't really want to short either of these next week. However, the run up in gold has been so strong, you can see that we are quantitatively overbought. And very often when this starts to happen and we start to slow down, you get a snapback. So intra-week longs, in other words, buying gold, you know, straight out of the gate is a little bit riskier next week in the sense that, you know, you could very easily get a snapback midweek. When we look at silver, I'll show you that this is exactly what just happened in silver. It's why silver started to underperform over the last couple of days, because quantitatively it was also overbought on a rolling daily basis. So when we look at silver, you'll see exactly what I'm talking about here in gold. But I do want to be long. I would just potentially filter out buying this straight out of the gate because I would anticipate a pullback first in gold. So with that being the case, what I'm going to be looking for next week in gold is I'm going to be looking for a pullback, a break back down below the moving average and into the buy zone at 3521.96. Going to be looking to buy the dip. This low here is where I'll be looking for gold to break through, start to lack momentum, and then re-break back inside the blue range next week. So that is specifically what I'm going to be looking at. You know, you can look for it to pull back, counter trend trade and break out, but again, there's a heightened risk around it snapping back if you do that. Now, no kind of strategy or setup should be quote unquote risky per se, because that's why you have risk management. You know, your risk management takes care of your risk. But just in terms of either being a winning trade or a losing trade, there's an increased risk of taking a losing trade from the kind of intra-week breakout in gold. Just bear that in mind if you're trading it next week. And finally, we have silver. Now have a look at how silver underperformed over the last 2 days, even as we had that sell-off in the dollar. Why was silver underperforming? Because quantitatively, it was overbought. And you can see whenever we start to get overbought on a rolling daily basis, it needs to pause and correct for a few days. So this is what I'm talking about in gold. You know, if you buy it pretty much straight out the gate on Monday, you could very easily see it pulling back, kind of moving sideways. But if you let it pull back, if you give it 1 or 2 days worth of pullback, then you could step in and start to look maybe for the counter trend break or even a pullback to the lower bound. So just bear this in mind. We may also be coming towards the top on a weekly basis in gold and silver, because you can see last time it did this, it was right over here. We pushed into the high and then we got the double top and then this neutralized again. So we could very easily see this pull back, make one more new high and then start to pull back, you know, for a week or so. Just as the daily time frame needed to pause for a couple of days, very often this needs to pause for a couple of weeks when you become oversold on a rolling weekly basis. And we saw that in gold as well. So not something I want to short, but just bear in mind if you are trading to the long side, you know, especially in gold, maybe let it wash out for a couple of days. In silver, you might start to get it, you know, kind of Tuesday onwards. So dropping down to the 4-hour chart, you can see we've already corrected enough to start to break out. So I'd be looking for this to pull back, break below the moving average and start to counter trend trade. And as this, when I say counter trend trade, I don't mean me specifically trading it counter trend. I mean, it starts to trade counter to its trend. So the price action is trading counter to its trend. That's the opportunity to look for the breakout intra-week above the moving average. Moving average follows it above the counter trend, and that gives you a bull flag into the profit taking zone next week, which is 42.98. So it doesn't mean it has to get there. You know, it might push up and it might start to double top and lack momentum. You may want to book profits early. But if it does get into this zone, then that is definitely somewhere you want to pull the trigger on profit taking, because you start to run out of road. If we start to counter trend trade and instead of breaking out, we come all the way back down, this low right here at the 38.72 is where I'll be looking to buy the dip for a 1 or 2 day reversal back inside the blue range. I can either buy this market or do nothing. Cannot sell this market under any circumstances next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.